Welcome everybody once more to Bootcamp Day 4 and your next video. In this video, we are going to combine what we've learned in Bootcamp Day 1, in Bootcamp Day 2, in Bootcamp Day 3 and apply all that knowledge in this video. I'm trying to keep it simple and I will do my best to keep it as simple as possible. In Bootcamp Day 1, we went through market structure, identifying market structure. That means abnormalities because we trade only abnormalities. That means market going up, the RSI consolidating or the RSI dropping, market going down, the RSI consolidating or the RSI rising, or market actually consolidating and the RSI is either going up or going down. These were the different scenarios we identified on Bootcamp Day 1 and where market would most likely go to. Market's tendency was done in Bootcamp Day 1. In Bootcamp Day 2, we went through important points on the RSI, important points on the exponential moving average, and we named those points of rejection almighty rejection. So in Bootcamp Day 3 then, we went through the exponential moving averages. We learned what they are. We learned how to understand them. And we said the higher the exponential moving average, the stronger the exponential moving average. The smaller the exponential moving average, the weaker the exponential moving average. And the bigger the exponential moving average, that means 200 compared to exponential moving average length. 200 is stronger and slower. Therefore, smaller EMAs, that means EMAs, let me just show you what I'm talking about. If we go here and we want to add some EMAs, sorry about that, EMAs, let's not even do that. Let's go here and click on relative strength index. Let's go here. I'm just going to add this, right? And let's go here. We can see that the length of the EMA, the smaller it is, as I said, the weaker it is, the faster it is to market price, and the bigger the EMA, the slower it is to market price and the stronger it is. That being said, let's dive right into Bootcamp Day 4. Now, if we're looking at this market, this is gold on a 45 minutes time frame. I'm just going to zoom out. We notice that this market is actually consolidating over the past few months, right? We had a beautiful buy here, beautiful little pullback, beautiful buy, beautiful sell, good buy, consolidated, buy, sold, consolidated, bought, sold, bought, retraced, and now we are thinking of what are we going to do. So step one, as I said, in Bootcamp Day 4 is applying those important key levels on the RSI, because those are the key levels that is going to give us or tell us when market will most likely reject. So in this case, I'm looking for a buy. Why? Because the market is going up. If the market is bullish, I want to look for buy positions. If the market is bearish, I want to look for sell positions. That means if the market is going up, I want to buy. If the market is going down, I want to sell. Now that I am thinking of buying, does this trade mean I should just go in and buy? No, I have to wait, analyze, or use what we've learned and execute the trade. In this case, market is going up. I want to go with the trend. So this is the first rejection I found, right? At this point in time, we can see that I just want to begin here. This is a rejection here. So I'm just going to observe this level on the RSI and I'm just going to watch. So this is happening on the 4 hours time frame. Keep in mind, this is multiple days, right? Ignore the signals you're seeing. So right now the market has gone up, the RSI as well has gone up and it's playing around. So I'm just going to wait. The next step is to wait till market retraces back, or the RSI, sorry, retraces and gets to this line, to this almighty rejection. We've seen there was a call signal here. Forget the signal. It's an absolute different strategy. So The market is still rising. Beautiful, beautiful. Now I'm aware and I'm confirming that I'm going to buy because the market is in a buy position with us. We are going to do this example on a 4 hours time frame first, and we are going to go down and try to look at smaller time frame for those who want to take multiple trades and shorter trades, multiple trades and shorter trades, right? Because the bigger the time frame, the larger the time you have to wait for your take profit. So let's go. And we keep observing the RSI. And what happens? We notice that the RSI is dropping. And there we go. This is when the RSI actually hits our rejection point we set here on the RSI. So now we notice that this point here corresponds to this low, right? And next point is that, what did we say in the first video? We said if market is going up, right, and does the pullback, and the RSI goes up and does the pullback, right? In case of a buy, what are we wishing? We wish that our price is more expensive than where it was before, right? We wish that our price here and here, this is more expensive than it was previously here, but the demand, that means the buying strength, is the same. This is what we call consolidation. We notice here also a few things. Let me just be putting everything that we learned. This is the buying strength, right? The buying strength goes up. That means it starts from here. It starts from 20 below here, or even below, and it goes up till 100, so 80 and even more, right? So the target of the buy strength is here. At this point, we say the market has almost zero probability of buying, or almost zero strength to keep buying, isn't it? So at this point, the market was here and the buying strength reducing, got to this point, and this was the rest of the buying strength that we had. You see this? So this is the maximum buying strength, right? The maximum buying strength is here. So when the buying strength now keeps reducing, the rectangle reduces. So let me repeat this because this might be confusing. The market started here. This is the RSI target is above here. The target of the buying strength is above here. That means the buying strength's maximum is below. That means if the RSI is below here at 20, we have from 20 a runway till 80 to run. Our target is 80 for the buy. Let me put an arrow there maybe. This is the buying direction, right? The runway for buy. So at this 20, and it keeps rising, went up, came down, it increased again. And here it was almost done. And see where we are in the market here, started recovering. The buying strength started recovering to this point until this point. And we notice now right here that we have the same buying strength. The market is much more expensive. Gold is much more expensive. And what does that mean? If you increase your prices and you have the same demand, most likely going to buy. Why? Because we have the scenario where market is rising to this point and the RSI is consolidating here, right? So not to get us confused, let me remove this and let me remove this. Let me remove this and remove this. Now the question is, where do I execute my trade? Where do I execute the trade? During the EMAs, this is one point we might learn in this video. This is maybe something new. If the market most likely rejected, or the market first rejection here was at the gray or white exponential moving average, this is the 200 exponential moving average, market will most likely reject on the same 200 exponential moving average. If market left on the pink EMA, market will most likely reject on the pink EMA. If market rejected on the aqua, market will most likely reject on the aqua. So now market is in between the gray EMA and orange EMA. Therefore, market will most likely reject, starting from the gray EMA is where I would execute my trade, till between the orange EMA. So at this point, let's see. There we go. It didn't hit the gray. It did not hit the gray, but I would have executed the trade. Why? Because I've seen that the price is extremely higher and I have the same buying strength. As simple as that. Basic economic. Then you execute your first trade, right? Here would be your first trade. Now, where do I put my stop loss? Where do I put my take profit? Since I'm executing the trade around the below the next EMA, my stop loss is closely below the next EMA. The next EMA is the orange EMA, which is the 400. So I'm going to give it some runway. It's closely below. I get the previous high, which is this. With this, okay, this was a beautiful trade. We have another call here, which this was a beautiful trade. And because this was a beautiful trade, right? And now, because this was a beautiful trade, and we noticed that this rejection was respected, therefore, let me remove this. Therefore, I'm going to modify my line and readjust it here now for the future, right? So, we notice that here we have a new almighty rejection. Whenever this market retraces or the RSI drops and gets back to this level, to the almighty rejection, I will check if market is higher than it was before. Let's keep checking. Let's keep checking. Okay, right now the reason I won't calculate with this is because the buy was not that big. You see the RSI? The RSI went from this position it bought just to this level. And if you compare this in the market, where is this? It is this position. You have just two candles that caused this. So I'm actually looking for beautiful buys like this. You see how straight this one is. You see how straight it went. This is what I'm looking for. How many pips were 100 pips, right, on gold? Beautiful. So was that 200 to 1,000? I've not been counting pips for a while. This is 40 pips. So let's keep looking. So I will not consider this. And the market keeps moving. Is the RSI is looking very interesting. It's dropping. It's dropping. Will it touch? No, it didn't, right? It didn't. It was very close. It was very close. Even though it was very close, let's see what we have here. Even though it was very close, let's see what we have here. We have market leaving this position to this position. And RSI leaving this position to this position. All right. Now, let's remove this because the trade has been taken. You see where the market left here? It touched the purple. It did not touch the gray. So most likely, if it gets between the purple and gray. Now, the next thing is that if you execute a trade and it goes against you and you recalculate and your recalculation is still valid, you can execute your next trade. So let's see what that means. This here, let's reasonable. This is 200 pips, not bad. 200 pips is not bad. So if you actually took this trade, you collect this one to this point, you would have good 200 pips. But let's just wait and see if we actually got to the line. Here we got to the line here, right? So I have a second trade here, even though you got here. So this is when it hit the line, right? This is the second trade, and this is the second move on the RSI to this point, right? There we place our buy signal again. Mostly below the next EMA. Take profit, you can target the next highs if it matches a good, at least a risk-reward ratio of 2, right? 1 to 2. And in this case, we have, yeah, even 3. The ratio is 3. Beautiful one, right? Beautiful one. There we go. There we go. There we go. Took us some time. This is 1 day, 2 days, 3 days before you take profit with how many pips? 500 pips. That's okay, right? And let's say this was another beautiful buy. You see this buy? These are the kind of buys I'm looking at. This is a beautiful buy. So I could basically readjust here or there, or take the lower one, my RSI to this level, right? And where is it? Let me remove this like this. Let me just put this like this. So most likely, this is what I'm looking at, right? I'll take this one and adjust here. Or if this market retraces and the RSI also retraces and comes back to this line, this almighty rejection, where will it most likely retrace? I would say, if you've been listening, between the purple or the gray, because here it retraces roll here. The purple caused the market here to consolidate. So we might have a consolidation when it hits the purple, right, before kicking off. But I would execute the trade if we have a good structure. So let's go on. There we go. There we go. Here it already hit, right? Look, we are looking at the RSI first. We look at the RSI and we got our touch here, right? This is where we got our touch. Exactly. And when we got our touch on the RSI, oh, let's be exactly there, we were at the green EMA. Therefore, we have to wait. If we execute this trade on the green EMA, right here, we might be in profit, right? But let's just follow, because anything else I'm going to say to this is something that would come in the premium class or in next videos. So if we are just X1, it hit the RSI, it hit the almighty rejection at this level, but the market was on the green EMA, and the green EMA is one of our entries. Now this is the next point. I should have said this at the beginning, but it's also fine. Our entries are the EMAs, starting from the 50th. The 50th is the first possible entry, not the red, not the yellow. The 50 is the first possible entry if market has a good structure, right? Then we have down the green, the purple. In this case, we executed trade at the green EMA. We put our stop loss closely below the next candle, right? We assume our stop loss was hit. Then at this point, we recalculate, because market dropped till here. And what happened? We have this on the RSI. Market is going up, right? Market is going up. RSI is going down. What does that mean? Strong buy. This is your second trade here. And there you go. Candle. And you could target the next high. A good risk reward, you are currently at 4. That means in this trade, you would already recover what you lost in the previous trade. Beautiful one. So we have been able to use from Bootcamp day 1, market going up, RSI consolidating, very good. Bootcamp day 2, setting almighty rejections to identify when the market will most likely retrace and bounce back from the buy, from its trend. Bootcamp day 2. Bootcamp day 3, where is our entry? Our entries are on the EMA. Market has been bouncing and retracing on higher EMAs, which are also stronger EMAs, which are also acting as trend lines for us, or support and resistance. In this case, supports. We know that if the market breaks the green, the purple is stronger than the green, right? And looking at what market did on the green, we could tell how much strength it still has to keep breaking. Right, there we go. There we go. There we go. There we go. So there we have. So let's look at the next one, right? This is, we are just trading gold over the weeks since December. This is just someone who is just interested in taking one trade and keeping it for 3 days. That's why I am on the 45 minutes time frame. We can do the whole thing also on lower time frames. You have more opportunities on lower time frames and stops. So let's look at this. Let's just clear the RSI, right, for us to be able to recalculate. This is gone. This is the current trade that we are on, right? And we've executed the trade. And since we noticed that this was a beautiful buy, what does that tell you? What does that tell you? Something is ringing. A new almighty rejection here. Beautiful. This one also seems to be good, actually. Even though, oh, no, not this, not here. I need to place it here on the RSI. If you notice that placing it there was wrong, that was very good. I need to place it here on the RSI. But it is way too high. Good that we are doing this. It is way too high. You do not want to execute a trade when your buying strength is almost the same as your selling strength. No, you want to buy when your buying strength is bigger, much bigger than your selling strength. And you want to sell when your selling strength is much bigger than your buying strength. So our next almighty rejection is this. So we keep observing. When is this market going to drop? When is it going to hit the RSI? Is it going to hit? It didn't hit. We missed this one, right? Here, it didn't really hit. But there you go. You see the purple? It was waiting for it on the purple because the rejection was here on the purple. Let's go. Let's go. We want to be strict. We want to be disciplined. We want to be disciplined and beautiful. Beautiful. We can consider this. We're on a 4 hours time frame. So now we have this. RSI did this, and the market did this. Now, I said on this, and I'll put the RSI here. No, the market's first point must be at the RSI. So you can't put the market here and the RSI. So we put it here and the market, whatever I want to call it. And this will be the next buy. Let's do the buy. Consolidated first a little, right? So let's see what we got here. If this was the buy, you target the next side, this was the bad trade, right? 150 pips, then we retrace and hit stop loss at 160 pips, right? Not bad, not bad. It's when the RSI actually comes and hits the 20 here. Can you remember Bootcamp day 1? What does this mean? And Bootcamp day 2, what does this mean? Actually, Bootcamp day 2, this is the oversold area. And it means market will most likely buy. You look at this beautiful rise. Let's see what this was. You see, look at this. This is this. This is this. All right, great. So basically, that is how you use Bootcamp day 1 structure, the arrow going up on the market, the RSI consolidating. This is a buy scenario. I'm going to look for a sell scenario, and we do the same thing. Bootcamp day 2, we did the almighty rejection, which we've done here. And on Bootcamp day 3, we did the EMAs, which we've done here. Now on Bootcamp day 4, we've combined all. And what have we learned new on this? We've learned that if the market rejected on the almighty rejection first point here, for example, on the gray EMA, it will most likely retrace on the gray EMA. If it rejected on the purple EMA, it will most likely retrace on the purple EMA. If it retrace between the gray and orange EMA, it will most likely retrace in the future between the gray and orange EMA when we are looking at this format, this structure. Now, let us look for a beautiful sell. Gold selling. What has been actually down these days? Let's go on Bitcoin, maybe. Maybe on Bitcoin, what has been losing its momentum. Let's go on smaller time frames, maybe. Right, this is the bad one. Just give me a second. I'm looking for an example, even though it's the same procedure, but it's just good to give one example. Stuff. Okay, let's do this one. Let's do this one. This is a beautiful sell from here. Let me just start from here, right? This is 5 minutes time frame. Okay. So looking at this, almighty rejections, right? I would place the first one. Where would you place it? Why not here? Because it is in the middle. You're almost having the same selling strength as buying strength. So you've observed that this market has sold. Here, it consolidated and it has sold. And you saw this beautiful sell. Then I'm like, oh, maybe this market is going to retrace and sell sometime again in the future. Let us observe, right? Let us observe this. So we go. Just give me a second. So we go. Pam, 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 pam. This is a good scenario, actually. There are a few exceptions in the market that I actually brushed down in the premium packet, right? So here all the EMAs are together. Which EMA do you consider? Is it the orange? Is it the aqua? You just have to look. In this case, I would always take it from it depends on the EMA. It will most likely not be on the aqua. In case it's retraced on the aqua, I won't take it because the aqua is too weak and all the EMAs were playing a role here. We see that the orange EMA is also playing a role here. So I would start calculating from the green, which is 100. It's the 150. No, it's the 60, 90th EMA, right? So let's go. Let's see. It didn't touch, but we have a beautiful. We see that it started dropping here. It dropped here. Let's collect this one also, right? Let's collect this one. Oh, this is. We are looking at this. We are looking at this. Both of them. We keep going. We keep going. Mighty rejections. Went here. Okay, there we go. This is the first one, which was this one. So I'm going to collect purple. What does this mean? Guys, this is something you might be asking yourself. You said previously that if the market rejected on the green, it will most likely reject on the green. Yes, it's not always the case. So what if we have this kind of case? Now, the question you should be asking yourself is, the green EMA and the purple EMA, which EMA is stronger? The purple, because the purple EMA is the 150th exponential moving average, and the green is the 90th. Therefore, if it disrespected the green, the purple is stronger. It will most likely respect the purple. And we have the scenario where RSI is consolidating, even going up, and market is dropping. Bootcamp day one, arrow going down, RSI is like this. What do we have? Sell. Therefore, we take our sell short position, we put. Where's our stop loss? We put our stop loss closely above the next EMA. There we go. You can target your next low. There we go. And we watch. We watched, and we watch, and we watch, and we go, and we go. There you go. Here, take profit hit, right? Can we take this? This is also a beautiful sell. Do you guys see this? This is a beautiful sell. But I won't take from here. I will calculate this as an error and take it from here. So, almighty rejection to this one, right? And to keep the chart a little bit clean, we're going to remove this one, right? So we still have this one. We are still observing this one. And we have this one for this sell. So let me already put mass market retrace most likely. Where will it retrace? Between the purple and the gray and the gray. So between the 190, 150 and 200. Let's go. Starting from the 190, we could have a trade. There we go. Here it hits. Here it hits. Here it hits. Okay, this is also a very, very good scenario. Market hits here, but we are at the green EMA. You guys see this? Would you take this? Right. So we have the market going down. The market going down, and the RSI has retraced. We have the same selling strength, right? Let me do the same thing we did for buy. This is sell. Sell starts from here, right? This is the maximum selling strength. To sell, we start from here. This is the begin. The origin is up here, and we sell down. We sell, and it keeps reducing. And at this point, there is no selling strength anymore, right? So we have currently so much selling strength like before, right? We have so much selling strength. Great job. If I'm selling here, you need to calculate, and have in mind that your previous drop was from the purple. So if you're executing your trade at a lower EMA, in this case, a green EMA, you will most likely have a rejection, right? Like the market is going to disrespect this green and look for its partner previously here. Is it possible that the market will retrace here and go back into your sell and profit? Yes, it's very possible. But you need to calculate that the market might look for what it did here, look for its purple before it starts retracing. So if you put your sell here, I've always said stop loss closely above the next candle body. But if you do this, keep in mind most likely you're going to hit your stop loss, and anticipate that I'm going to execute this trade and put my stop loss and calculate that it will most likely retrace to the orange, to the purple, but I'm going to put my stop loss therefore closely above the next EMA, which is the 200, which is the gray. But I'm going to keep my take profit good at a good risk reward ratio. This is because in case the market does not retrace and goes to the purple, I still have a trade. In case the market goes to the purple and it retraces, I'm still in the trade. But this is a risk you're taking. Every trade is a risk, though. There you go. It didn't hit the purple, but we still have a good trade. Right. We still have a good trade. We still have a good trade. And there you go. This should be your take profit latest at this point when the market is oversold. If you were daydreaming, right, latest at this point, you should have taken your profit, even though I would target this year. Okay, this was, I would maybe go on 2, right? And here, market is oversold. So most likely it won't sell again, right? But does that mean it will really not sell again? Question mark. Oversold means you should not be selling when the market is oversold. You should be taking profit. You should not go here and execute a sell position. Nah, you don't do that. So let's go. Oh, beautiful. Let us readjust our almighty rejection because this was also a beautiful sell we got, right? Let us adjust it. There we go. Here we have another one, right? We have another one. Where is it? There we go. But I guess at this point, we are already getting it. I think at this point, right, where will it most likely reject? Between the green and the purple. Between the green and the purple. Yes, right, between the green and the purple. Green and the purple. And this time around, sorry, I'm going to put my stop loss closely above the purple. And let's see what it does. Amazing, guys. Beautiful, beautiful. So that is what we do. Right, that is basically it. As simple as that. We can definitely go deeper. There are many special conditions, many special scenarios you're going to see. But this is the basic, right? This is when market is very clean, market has a trend, and we go, right? That being said, I hope it wasn't complicated. I hope we kept it simple. So a short recap, a short summary. From Bootcamp Day 1, we learned to identify this drawings market leaving up here and coming down here. And for a sell position, we connect only the highs. For sell positions, we are looking at only the highs. We are not looking for the lows. Some people will do this and do this. Oh, no, you don't do that. For sell, we look at highs because we sell at higher prices. And for buys, on goals, we look at the lows, right? So for sell, we look at this, the highs, right? And we want to go down, we want to go down, we want to go down and down. And here as well, isn't it? Yes. That being said, on Bootcamp Day 1, we figure out to identify this down, retracing, market going down. And we said, if we connect these two and we connect these two, market is dropping and the RSI is consolidating. Therefore, on gold, we also had some few examples. I don't know where we were. I think here, right? But on the 4-hour, 45 minutes time frame, nice, we connect just the lows. I just want to stress this because I've seen people, the lows, just the lows. And there we go. Bootcamp Day 2, we identified the almighty rejection, which we've covered here also pretty well. Very simple. Very, very simple stuff. So how do you place your almighty rejection? You do not look level or around for a buy like this one or this one for a sell. No, you want to actually go down here where you have much buying strength or come up here where you have much selling strength, right? Let me just put this like this. Down here, this is your buying strength, right? This is your maximum for sell and you are targeting down here to take profit down here. Buy, you're starting here, this is your origin, your maximum, and once you go up, your buying strength reduces and you target up this high. We've seen how we reject and keep bouncing on the EMAs, right? Very good. On Bootcamp Day 4, we combined everything, we merged everything together, and we looked for a few trades, executed the trade, looked for our take profit, we took our stop losses, take profit and stop loss, and how we set those things. That being said, that will be all for this video. I don't want to keep it too long. So if you have any questions, you can always hit me up in the chat or in the comment section. Now, I don't usually say this, but if you like this video and you like what you're learning, please like the video, leave us a comment and share. Go to the previous bootcamp videos, like the videos, leave a comment, leave a feedback and share them. The video is free. The knowledge is free. That being said, thank you and have a nice one.